Tyler, the commodity cycle cost curve continues to remind investors why you can never say it really can't get any worse.
There is nothing that will make you feel like you've gone 10 rounds in a boxing match than trying to invest in commodities. And we're going to talk about another one today.
Yeah, this is a company we've talked about before. I'm going to pull it up right here on the screen. It's Albemarle. This is year to date. Well, you know what's worse than that? The past 12 months. We'll go back the past 3 years, and you're starting to see the peak and where it went up the mountain and back down. If our good friends over at Y Charts had lithium pricing is one of the things we could add to that, you would basically see the stock price ride lithium pricing up and back down. So we're going to talk about Albemarle, what's going on with the business, the greater scope of the lithium market that it participates in, and a little bit we'll and we'll end the video with talking about our prospects for it, whether or not we think it's a buy, where investors should be thinking about this business. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, I've got an opportunity for you. Go to our special link. It's fool.com/unscripted. Go to that link. You can get access to The Motley Fool's 10 best stocks to buy right now. Go check it out. Okay, Tyler, let's lay the background first. What's Albemarle's core business, of course, is lithium mining. Let's talk about what that means, where the tailwinds for lithium, what has gotten investors excited about it, what are the challenges that have brought us to where we are right now?
Yeah. So, kind of hinted at it a little bit with lithium. Lithium ion batteries is all the rage when we talk about mobility, we talk about energy storage. It is the go-to mineral when we talk about how to construct the current chemistry of batteries and also some of the next generation batteries that we're planning to deploy over the next 3, 5, 10, 15 years. It's and the reason that it's been such a hot commodity as of late is because there's been rather spectacular growth in the electric vehicle market. And there has been over the past couple of years kind of this idea that we were going to be significantly short or in short supply of lithium to meet the demand for these batteries. And so there was this massive spending spree on new developments, new mines, new extraction facilities to get lithium to the market. And if this sounds familiar to like every other commodity you've ever heard of, that's the case here. It's been one of those instances where demand has tapered off ever so slightly. It didn't quite hit those spectacular growth numbers that people had originally thought they would. And as a result, with all that extra capacity coming online, we're there's a little too much lithium just flowing through the pipes right now. And as a result, prices are going down. When we talk about lithium, it means the Chinese market more so than almost anything else. I know that we as US investors, we tend to view things a little bit American and North America centric with trends and things like that. But with global commodities like lithium, you have to think about the whole market. And that's where things have really gotten out of hand. China is the largest producer of lithium ion batteries, electric vehicles, things like that. And they're seeing a significant slowdown. And recent news that could drastically change the way China is making electric vehicles is Europe just imposed some rather significant tariffs on Chinese EV imports, which is going to slow down production there and maybe transfer to European producers or auto manufacturers, but none of them really have had built EVs quite at the scale that China is doing today.
Yeah, and I think looking beyond the EV market is kind of the background here, energy storage, and this it was like a race to get that capacity online to try to get ahead of everybody else, to get in the market while the demand was increasing. We've seen Albemarle, we've seen a lot of other players in lithium production do that. And the interesting thing about it when it comes to China is China has a noted history of the CCP, the Chinese Communist Party, through its control of the Chinese government, putting its thumb on the scale for domestic companies, providing subsidies to boost domestic industries. We can go back almost a decade ago at this point, and we saw a lot of the same thing happen with China's steel production. You go through the mid and late 20 teens, and North American steel producers were producing at record volume levels. More steel was being manufactured in the United States than really at any time in our country's history. Yet steel companies' profits were lower than they were in the prior peak of the prior cycle because a massive amount of Chinese steel, largely being subsidized, was being dumped into markets that were supplying North America that undercut pricing, right? Because China wanted to support its domestic manufacturing business in violation of free trade agreements, right? I think that's really important. Anti competitive subsidies to undercut cost advantages and give them pricing advantages. So we saw that happen that made the steel industry tough. Tariffs came into play, and that industry's gotten better, and we've seen steelmakers start to make money again. An industry where we didn't really see the same impact of China, but we've certainly seen the impact of um, the race to bring production online and the impact of that on commodity pricing. The oil and gas industry, oil prices, for example, coming out of the global financial crisis, oil prices were triple digits, and they stayed there for multiple years because there was a lot of concern about access to oil globally. Then what happened? Tyler, you and I lived through it and invested through it to our detriment. Fracking and horizontal drilling, the technology and the innovation in the oil fields, the actual processes that have been developed vastly better. And oil prices, as a result, because this massive amount of supply started coming online, oil prices crashed and spent most of the next 6 or 7 years below the long-term averages, and billions of investor dollars were lost as a result. Even though it boosted the economy, it was globally, it was good for business when oil is cheaper, right? So we've seen that play out in these different commodity markets where there's concern about supply, prices shoot up, high expectations are there, and then something happens that blow things up, whether it's something that handicaps demand, new supply comes online that drives prices down. So we've seen it play out before. So here we are today, Tyler, thinking about lithium prices, which I think peaked around $80,000 a metric ton, and they're in the 20s now, maybe come down substantially. We've seen weakening EV demand in multiple markets. We've seen a big slowdown in growth of demand in North America, Europe similarly. Chinese demand is weakening, but that's still the biggest market for EVs globally. Yet China continues to prop up and prioritize their domestic lithium production. Tying that back to a company like Albemarle, where are we, and how should investors be thinking about Albemarle?
It kind of comes to two things because there's the current production, like basically it is existing facilities. Albemarle does have several low cost facilities that will be able to generate cash. One of the big things that they have really struggled with, or at least part of the reason they struggled so much in the most recent quarter, is they had to take write downs on a lot of new projects, things that they were in development for, things that they were pursuing, a lot of those kind of ambitious growth product projects, maybe those things that were a little more reliant on higher commodity prices than they had originally, and than what has materialized in the coming in these past couple of months or
Yeah,
through
I'm gonna bring a chart
2024.
up on the screen to show how this plays out. So again, high lithium prices. We saw record levels of net income, and again, this is quarterly. This is trailing 12-month net income. So again, the losses, a lot of it, like you said, was uh, booked losses, not actual cash losses. $500 million over the past year. Again, a lot of that was because of just the past couple of quarters still generating positive cash flows. Like I'm showing this on a quarterly basis. You see the ups and downs, but the point is still generating positive cash flow, even though reporting some gap losses.
Yeah, which based at current prices could keep happening. And like to keep in mind, look, one thing, like you said, you and I probably learned from oil and gas in the 20 teens is you don't think it can go lower, and then it just keeps going lower for a while because there is the physical supply and demand, and there's a little bit of the kind of the speculation aspect of it. As much as like we don't think that physical commodities are driven by the psychology of the market like stock prices are. They are. People are going to be similarly bullish and bearish on the future prices of commodities just as much as anything else. And as a result, you're going to run into situations like this where people are going to be like, ah, I don't need to pay a premium for future price because it's so cheap right now and it's supplies coming on. There's no point in me hedging out or doing all those fancy derivative contracts to try to lock in prices or anything like that. So as far as what this means for Albemarle long term, I think obviously they're going to have to, as management has mentioned, they're doing some significant cost cutting. They're doing some project write downs. So they're taking some of those development projects and pushing them much, much further out into the future, which is the right things to do. How much of that makes an impact in the short term, I'm not sure. But as long as you can batten down the hatches and, survive the down cycle, which is very typical in industries like this, companies like this will survive. It doesn't necessarily mean like, "Oh, I should be running out to buy Albemarle now because 3 years from now, it could be doing much, much better," because it could arguably get worse. And from an investor standpoint, it is really, really hard to sit through a 50, 60, 70% drawdown on your stock. I don't care who you are. It's really hard, and it to me, it is prudence because I think a lot of investors are gonna look at this and say, "Oh, it's trading almost right around its book value. It's at 52 weeks low. It can't get any lower. It must be a time to buy now because the stock is way down," right? Well, not necessarily. Maybe sometimes it's just better to keep watching and see what happens.
Yeah, I think you're right. A couple things I want to just tee off on what you were saying there. One thing, talking about book value, using that for these commodity-based companies as a valuation metric. The write-downs that we just saw, you know what that means? That's a good reminder that book values can come down, right? And if we do see a protracted period where commodity prices stay down even longer than we've seen, gap requirements, the company would have to continue to write down the value of assets. So book value could continue to erode even more and more. So you have to be careful there. I would say that I think Albemarle is getting interesting right now because of the fact that we are continuing to see that it can generate positive operating cash flow, and even in this kind of a tough environment. So I think an investor like myself, I've been really patient with this one. I do think eventually we're going to see demand pick back up. It's the wild card is going to be international supply. That the thumb on the scale from China really is to put it as bluntly as possible. That makes it harder to make money in this industry. But I do think that Albemarle is getting interesting at this point, but you have to be an investor who's thinking across the entire cycle, right? So right now we're still in a big part of the downturn. We don't know if we've hit the trough of the cycle yet. It doesn't feel like we have, Tyler, which means that it could get worse before it starts getting better. So you have to be thinking about getting through the trough, seeing signs of a recovery, both in demand, but also an idea of where the pricing for lithium is going to be through the cycle, and you have to be thinking in terms of multiple years with Albemarle. It's a high quality business, but this is a very, very tough industry. And I agree, there's no reason for investors to rush to build out a position.